The market trades sideways as we await major catalyst. Can the bears step up or will the bulls ride again? This is Invest with Jacob. Okay, guys, so in last week's videos, we were talking about the ABC up toward the 5422 plus area and then see what happened from there. And that's pretty much exactly what we're still seeing as the market traded mostly sideways yesterday as they await PPI and CPI on Tuesday and Wednesday. Now the question is, will the bulls or bears step up? I'll get into that in just one second. But first, if you're new here, welcome to the show, guys. My name is Jacob Gabbard, and this is Invest with Jacob, where we use Elliott Wave Theory to break down the SP 500 and the NASDAQ. I highly encourage you to hit that subscribe button down below so that you can get our daily S&P updates, our trade setups, and our buy alerts. All right, guys, we crushed it today. We got in early at the low of the day. Even with the minimal moves back and forth, we were able to catch the biggest move up and do very well, as you can see on the screen. And then I posted this because it's really important to understand the power of discipline and consistency in trading, where you use good setups and understand how to let your winners run and cut your losers fast. We've had 275 trades this year, and we've only won 122 of them for a 44% win rate. However, we have won $1,175 per contract, which is going to even out to about $45,000 on the year. I show you below how a $100,000 account makes $45,000 for a 45% gain on your investment. And it's a very low risk strategy where you're only risking about 2.5% of your overall bankroll, and our average loser is about 0.6% of your average bankroll. This consistency and discipline in trading is how you make money in the market. It's not about getting rich quick. It's not about one-day wonders and magical hits. It's not about who's right or wrong. It's about making money with a consistent, disciplined style. And if you want to join a winning team that consistently delivers winning trades, you need to check out later in the video. But for now, let's jump into the chart and take a look. Okay, guys, so here we are on the 1 hour futures chart for the S&P 500. And since we struck the low last Monday, a week ago, we've been looking for this bounce up toward the 5422 to 5581 area. We've been getting it so far in exactly the structure you would expect in ABC. And basically yesterday all they did was kind of grind it up and slowly sideways here as they wait for their catalyst to see who's going to jump out and give us some more information about exactly which way we're going. I've explained many times that the breakdown through this support right here put us in a neutral area on the market where we were neither bullish nor bearish. And a breakdown below the April lows would turn the market bearish. A break back over 55.81 would turn the market bullish. And in between, we're sorting it out. So as of right now, we're still looking for them to get up to 54.21 would be our normal target, up to 54.93. In that area is where you would expect them to hold and turn down. However, the bears can take it all the way up to 55.81 before turning it over. Above that, the market starts to turn bullish. So we're still looking for continuation. They should be getting to just about the end of this ABC, at which point you'd be looking for a move down. Now, the pullback here will be very important because if the pullback is a 5-wave structure to the downside, that could be signaling a bounce and then a breakdown in a major way in the markets. If the pullback is corrective to the downside and we get a 3-wave pullback, then we would look for higher and a bigger ABC. That would be the A wave overall. That would potentially either be an A wave going to new all-time highs or a bigger ABC before we turn over around the 764. Breaking over 55.81 would tell us if we're going to all-time highs. Turning down in 5 waves would tell us that we're going to break the April lows and head down in a much bigger way. So still a lot to sort out. This is going to be a choppy area. We do have 2 catalysts that often give us straight line moves. So if tomorrow we start to see that straight line move to the downside in 5 waves, that's the time to get very cautious in this market. If they spike it lower and hold or spike it directly higher, we'll have to see if they can break out over 55.81. Over on the NASDAQ. Okay, on the NASDAQ, almost the same story. You have an ABC. It's a little bit weaker in regards to the retrace. They've just now gotten to the 382 where the ES is very close to its 50% retrace. We would expect them to push on up towards 50%, but the 382 is a very common A wave target. So it is possible you're looking at A and then you get a BC like this into the 19603 area on the NASDAQ where the ES might go hit at 764. In any case, we're still looking for a little bit higher. However, same warnings apply. If we start to see a 5-wave move down off of either of the catalysts in the next couple days, that would be a warning that we are going to come down and break those April lows and start to really sell in a much bigger way. If they can move back through 20,132, then we'd be looking to new all-time highs in the 22,000 range. So still some stuff to sort out here. We're in a range. This is what happens when you get tied up in a range in corrective structures. You have to wait for key levels to either hold or break. We have not seen any of that yet, as they've stayed in this little consolidation area for a little over a week now, giving us the pattern we're looking for, but not yet necessarily enough information to decide if we're bullish or bearish just yet. So we stay neutral and day trade the swings, which we've done very well at. And then once we get the break, we understand where the market is headed. So pretty simple stuff. Back through 20,132 and really through 19,603 is kind of a warning to the bears, but back through 20,132, and we'd be looking to new all-time highs back below the April lows, and we are looking for a sell-off in a major way. So until then, expect more chop and sideways action with occasional C waves that will give you lightning quick moves. You'll probably see one tomorrow, a quick move down or up. And then from there, we'll look for the key levels to break. Guys, if you love the information I put out in these videos and you want real-time market updates from me, you need to check out investwithjacob.com. There's a link down in the description. Go ahead and click that link. It'll take you right over to the webpage. Once you're there, check out our membership plans area. We have 2 incredible monthly plans that both come with a 7-day free trial, because I want you to get in there and make sure you love it. I want you to become part of the trading team. I want you to interact with us and make sure it's for you. Make sure you understand it. Make sure it's what you think it is. It's what I say it is. Make sure all of that is true before you ever spend a penny. You can cancel at any time, and you literally have nothing to lose just by checking us out. We also have our educational material, our Elliott Wave 4 Beginners online course, and our Advanced Elliott Wave courses. These courses are helping traders understand these complex markets, understand the key levels and how to trade them, and understand how to make money in these crazy times. The Advanced Elliott Wave course does go through the complex patterns, like your advanced fib levels, the diagonals, your double and triple threes, your flats, your triangles, and your trading Elliott Wave. Many people know the basic concept of Elliott Wave, but don't really understand how and when to trade it. And this is helping traders make money in the market. As you can see on the screen, people are loving it, but it is an advanced course. So if you're just getting started with Elliott Wave, or this seems too advanced for you, we also have our Elliott Wave 4 Beginners online course. And this course is helping real people make real money and finally understand the market in a way that makes sense. It can be so confusing when good news makes the market go down and bad news makes the market go up. And that's because Elliott knew that the news cycles are garbage long ago. You see blowout earnings and companies tank 5, 8, 10%, and you see horrible earnings and companies launch 10%. It's because the news doesn't matter. It's simply noise, and the key levels do. Elliott knew what happened when those key levels held and when they broke. This gives you a huge advantage over the rest of the market. This course, it's 25 videos. We go through 3 parts: your introduction, get you introduced to Elliott Wave, your mindset, get everything set up. I talked about discipline early in the video. We talk a lot about that here. Your mindset and emotion is the most important thing in this course, and it's not really even about Elliott Wave. It's about understanding how to keep yourself in check when the market does crazy things. We also go through your chart setup and tools, every tool you need to use with Elliott Wave, why and how to use it. And the Elliott Wave 4 Beginners area, where we go through each of the waves, go through the corrective depth theory, the theory of alternation, the pivot, how to find these key levels, how to measure the waves, how to know when they're failing, how to know when they're succeeding, how to know what the counts are, all the different things you need to know to understand this crazy market. The cool thing about both of these courses is, if you want to get them both for a discount, you can get our bundle package and get $37 off. However, if you want to pay nothing at all, simply join one of our monthly rooms, as all of our training material is included in those rooms. In our first room, the Invest with Jacob room, you get all of my real-time market updates, all of our buy and sell alerts, all of your Elliott Wave questions answered, a midday video. Guys, we go over so many charts. I went through gold today. I explained why my 401k has been in precious metals for quite a while now, and we're expecting a big move out of gold and silver. And we've been in that precious metals fund instead of the market, since the market is up near an ending cycle, whereas gold is at a beginning cycle. We explained all of that today on the call. So many different things we give you just in that call alone. That enough is worth the price of admission. And you also get all of the training material I just showed you. We trade the SPY and the QQQ, and we swing and day trade, so we do trade quite often in my room. Now, if you're looking for futures trading, individual stocks, income trading, and advanced training, you need to check out PT's Throne Room. In there, you get everything you get in the Invest with Jacob room, as well as individual stocks, futures trading, PT's income trading. Guys, he had 87.5 points last month. He averages about 50 points a month. It is crazy how great it is just to watch time go by and collect paychecks. PT's killing it in there. And he also has his reduced risk binary method that gets you in at a low price and gets you big multiples on your money, and it's how he structures that trade that's so unique. It's something you really have to see to understand. And that's another reason we give you that 7-day free trial. He also started a challenge account where you put $4,000 into an account, trading mini ES futures, showing you how to build a small account into a large retirement or savings account. Guys, we'd love to have you in these rooms so we can all make money together. All right, key takeaways for today. We're still looking for this ABC to go ahead and fill all the way out. It could have already been done. The decline will really tell the story if we get 5 waves down. That is a major warning to the bulls. and then a corrective bounce, we'd look for a bigger breakdown after that. If it's a corrective move down, we would look for another high, and how high that high goes, it's a lot of highs, and the structure it takes will be telling on that as well. Over 55.81 turns the market fully bullish towards 58.30 to 58.50, and below the April lows makes it bearish. Over on the NASDAQ, again, still in that neutrality zone, looking for them to complete up towards 19,175 to 19,603. If they can break over 20,132, that would point to 22,000 in new all-time highs. Holding this level and pushing down in 5 waves would be a warning to the bulls that the bears are taking control of the market and looking to push down in a major way. Guys, that is your market update for today. I will talk to you tomorrow.